You were explaining to me that the question I asked was part of it's part of the what you are going to answer in technical analysis.
Yes, I've actually handled that in the technical analysis. Mm. But I will just look at a few of these things. This one is NZDCHF.
I put my own TP at the highest point where it starts.
This place,
Yes.
this place, a nice. It's one of the target, but it's not the final target anyway.
Yeah, I know it's not the final target.
But if you take this and draw it back here, this level can be a final level. Can you see? That is a nice level, because if you look at the overall here, this one, if you look at this major trend line, that place is even small compared to the trend line where we are targeting.
Yeah.
You can see how small it is. So if you come back to the daily,
I said we still have a long way to go.
that trade has a long way. This zone is still a demand zone anyway. This place, but if you are trading, you don't just keep all the trades like that. If you look at this level was the first place where you will expect the first discomfort.
Okay.
This place was the first discomfort, and it actually touched there and start turning back. So if you
I should have booked take profit around that. I should have take my first TP at that point.
it depends on the equity you're trading with. If you have something that is sizable, you could have taken a little there, but if you have not taken, there is no problem. There is another option here, like for people that missed the entry from this down back to there. This is the 1 hour time frame, so the 61.8 fib level is still here, so it can retrace back here. Another entry, assuming you did not enter all your trades where we entered, this would have been a place to enter another 0.1, because once this trade comes to this level and retraces to the 61.8, it can push to this level. This is one of the trend line that is here, this one. Anytime the trade comes and break that trend line and close above it, just know that this is the next target. How you manage your trades, this is what will be happening. This one will come back and then push, and then maybe it will be it won't. If somebody is going to be a day trader, this is now how you will trade as a day trader, following the overall swing direction.
Yeah.
So this is how it would have been. Okay, so if it breaks this level, stop loss to break even. You get?
Yeah.
If you do it like this, all the other trades will be free. You have nothing to lose. Then your final trade, if you enter 3 trades, you close one, they are one of the trade that you entered at this point, or the second place, you will leave it to this place. It might take long, it might take 2 months, but you will leave it. But if you look at it, the risk reward ratio there is around 6.
6.
Yes, mine is 6.
Yeah.
Yours is 6 as well.
Yeah, sure. Okay. I'm watching your own. I need to.
Okay, if you take your mouse pointer to this, it will show the risk reward ratio here is 6.43. And then the second trade, if it finally gets there,
Yeah.
the second trade will be 19.
19.
This is why you can pick one trade and keep it for the entire year. That does not mean that this is the only trade you'll be taking.
You still analyze other pairs.
Because once you have banked some profit on this one, the moment it breaks and closes here, you have already taken out some money and move your stop loss to break even. You are no longer at risk on this trade. So you will have 1 or 2 trades closed, while we will be analyzing new ones. Anytime New Zealand dollar card comes, you start that one, and then you continue the analysis. It's an ongoing process, and you will be closing some and leave some to be going like that. So if you do like this, you won't over trade. But this is a barrier. This is a barrier that you have to face. You have to plan yourself. How do you manage it when it gets there? But sometimes if it gets there and start coming back, you don't need to panic anyway. Is there another one?
We talk about the GDP card that we should watch ahead of the interest rate, GDP interest rate.
And you see this one pushing down. If somebody was a day trader, this on the 1 hour, you could have taken a trade here. You know, but if I go to the weekly time frame, this is the trade now. I don't like trading against the direction of my fundamentals.
Okay.
So if you take the Fibonacci retracement from this level up to that point, this market can still turn from here and start going. That's why I don't encourage people trading against the trend.
Okay.
I don't encourage people trading against the trend. Why won't you be patient? If it breaks here, that's why I pity people that say I trade only one currency pair. I'm a master of gold. I'm a master of this. Trade doesn't work. It doesn't work that way anyway. So why I like this point? Why I like this point? This level is 61.8 fib level, and it's a demand zone.
Yeah, but so many people, like, I do hear that the level of 0.61, I mean 0.5. Okay, instead of saying that, let me ask that. Between the 0.5 and 0.168, which one is the best point?
For me, the 0.618 is the golden ratio. Do you get? You can enter at the 0.3, you can enter at the 0.5, you can enter at 0.6, you can enter at 0.7. There is even 0.8 something that you can still enter. The only time you are not permitted to enter is when it crosses this place. But this 0.618, my own level, there are some people that their level is 0.5 and 50. But I have seen that what gives me the kind of trade I'm looking for is 0.6 and 0.7.
Because they are demand zones.
This not just the demand zone. They are based on the Elliott wave.
Okay.
And then the hedge funds traders, they prefer this thing getting, because let me tell you one reason. If it gets to this level, if it rejects at the 61.8 fib level, the next push used to be very far. Let me show you something here. If you are a day trader, you want to think like a day trader, you can be following this thing down. But I don't see any reason why I should be doing that. United Kingdom has just told you that they have kept their interest rate flat.
Yeah.
Canada is cutting rate. The overall trend is bullish. And then you are trading against all this data. It's not gambling you are doing.
It's total gambling.
So that is why I don't like people that say we ignore fundamentals. If you're a day trader who enter your trade there, close after 3 minutes, after 1 hour, you can do all this one. But I rather trade the way I've learned to trade. I wanted to show you something. So if this thing should come to this level, you will see this move. You can trade from that level to around here. That's how many pips. Instead of going there to gamble, some people between this place back here, they will blow their account. So what's the need? Because there's a lot of uncertainties. Do you know the reason I don't like taking on the 50%?
No?
In fact, I can't remember the last time I entered the trade on the 50%, but there are people that enter it there.
Yeah, because if you remember, the NZDCHF, was it yesterday or the day before? It shows an uptrend from that 0.5%.
Okay, but it failed now. You saw that it failed.
Yeah, it failed and go back to 0. Until it gets to 0.618.
So I prefer at 0.618, that level is a solid demand zone. Look, you can see things happening here. You can see price action here. A lot of rejections. So just like what happened here, it came here. If you had entered this trade here, this would have been a loss for you now. So look at this one. Do you know this trend? Do you know that this one you will not measure from here? If you measure from here, it's not right. Based on market structure. So let me take the Fibonacci retracement. If you take Fibonacci retracement from this level down to here, you see that this first place was 50% and it pushed up and failed, came back here. So this place became 61.8. This was 61.8. You could have entered there or at the 78.6 fib level. You see it. and your risk is even smaller. Everybody have their strategy, whatever is working for you. Just that if you are trading from that level, you will miss so many trades, some trades. If it is somebody that the hand is always hot, he wants to click buy. There are people that their hands are hot. They can't stay without pressing something.
They just want to enter.
They just want to enter. See this one now. Is this one not 61.8? Are you not seeing it there? So with all this kind of confirmation, then you still want to, well,
It's only one person out of all of those people that I do follow them that really talk about fundamental analysis the way you talk about them.
they ignore the fundamentals. When you are trading with all these sticks, all these candlesticks, you are just taking blind action. You do not know what is happening on the background.
When all of them are talking about fundamentals, they just talk about them. When you see a red candle, you see
they go to the forex factory and you are reacting to the news.
exactly.
Well,
None of them was able to tell us at the like we're able to know beforehand what is going to happen to NZDCHF. Well, I mean, what is going to happen in the GBP news that is coming, what is going to happen from NZD, what is going to happen to CHF, what is going to happen to all of them. None of them was able to say it, except one guy that was able to explain where you explained to me. I was like, oh, so
so you see, and another thing is, if you drop a fundamental video, people don't watch it. You see your views will be like 300 or 100 or 150. But drop all those their chat pattern, all those, because we like a sensation.
what
We like a lot of noise and lies online. You know, when somebody is doing another thing to make money, then he's telling you that he's trading and this and this and this. Well, I don't argue with people that have their results, you know. But
it was not even the chat pattern that I joined your. It was not about the chat pattern or the chat analysis.
do you know that this period I'm taking time to go back to my technical. Before now, I was not really worried about technical. Because if I come to the fund, once the fundamentals have given me, and I've come here and I've drawn the line, I know that this is where I'm waiting for. Why do I begin to bother myself? All these small things, this small movement,
Wasting time.
and then all this one, then I'll be there on the screen every morning. I'll be sweating. This period, I'm always on my computer because I'm recording, I'm editing my videos. But if you are finished doing this, if you have a day job you are doing, or any other, even if you do not have a day job, do know as a forex trader, you need to engage yourself with other things to get your mind off the chart. Even when you are trading, even when you have large equity, you should still be if you are running a company, you can still be doing other areas, because when you set a pending order here, or you set an alarm, the trade trace to that direction, you receive an alert. So you go and check it. If it has confirmed, you place the trade and continue what you are doing for weeks. And even if the news comes against you, to push, it will not reach your stop loss. Unless you use a very tight stop loss. But if you use a robust stop loss, like use the weekly or the monthly data to calculate your stop loss using the average true range, you should not have any problem. Just that the profit you will make might not be big. The only challenge with this kind of method of trading is equity, because since you'll be waiting for a long period of time, you want to enter a trade that can, at least, if that trade finish playing out, your bank account should be
fat.
It should be fat, you know, so you can afford to wait. But not when it finish playing out and then maybe you enter 0.01 lot size and then you made $20. It's frustrating anyway. So that,
Yeah.
after waiting for weeks, then you see $20, you see $30. But when you close like $5,000, $10,000, $15,000, which is possible. You can relax yourself, enter 2-3 entries, and if that happens for 2 months and you close one trade, if any time that the trade comes to the 78.6 and change direction, the next push used to be very aggressive. If you see what happened to GBPJPY, this trade was a 78.6 fib level trade. From here it pushed all this movement. So the way I've trained my eyes, I can even open the chart and know the fib level. So from here to here, 78.6, you see the movement. Then NZDJPY, this was a trade I called. My other student took this trade. they were afraid. They just closed the trade after making a profit of 3 times. They closed it. I told them just keep the trade and go and sleep. Because you've done
They
the
are afraid of
huh?
the reverse. They are afraid maybe to reverse against them.
What kind of reverse are you? Look at this trend. Does this trend look like something that is joking? Look at this trend, and not just the trend. The fundamentals are very solid. Everything is telling me that the time I gave the signal, everything was telling me that Japanese yen is going to be weak and New Zealand dollar is going to be very strong. Then they enter the trade and we are using all those their day trading mentality, close the trade and we're looking for another signal. That's why in that my WhatsApp group I might not dropping because they expect you to drop signal every day. Some days I try to give them a signal with very small stop loss and it fails. You get so,
Especially the Euro, USD, and the GBP.
so when those kind of trades fail, I like there was a pound a trade I gave on the pound against US dollar. Let me tell you how that trade was on my channel. I gave that trade because I went to investing.com and I collected the GDP data of US. I mistakenly imputed another country's GDP.
Yeah.
So I could not fully interpret. It showed me that the GDP of US was very strong, but I did not know that it has dropped from 4 point to around 1.6. It was an aggressive drop. So I used that data to do the analysis and I posted on my YouTube. It was later after that trade failed. I sat down. I was trying to find out why did the trade fail. I now went there, saw the GDP data. I wrongly imputed it. That day I was not concentrating fine. So, but you have made the mistake now. So many persons have seen it. So if I was in a hedge fund, they would have penalized me for that action. So if you have the fundamentals working very fine, if you understand the fundamentals and you have patience and you have capital, I don't think you have any problem here. So look at this one. This is 78.6. That is what I'm talking about. The distance to the stop loss used to be very small
Compared to the 68 point.
compared to the imagine you entering at the 50, the stop loss should still be around here. So why do I want to do that? So this is another solid trade that people will have to wait for weeks and months for it to play out. This trade, as it keeps going like this one I'll keep adjusting this thing from here. I'll keep adjusting until it comes back to the trend line. I don't know when that will happen, but it might take some time because the fundamental that is, and one of the reasons why it is good for you not to enter 3 trades and not close the final one is because this movement might keep on like this for a long period of time. And this area is not a place for you to be looking for new trade because you are setting up yourself for failure.
Yeah.
Because it can turn and start coming here. This place. Do you know why it's dragging the feet like this? Because it's already doing extra time.
It's getting weak.
This thing is extra time now, like in football. When you have entered the injury time, then that is where you want to enter a new trade and it turns and the fundamentals tell you should be buying, but should you buy at this place? Okay, I think with that, let's see the pound CHF because that trade is running for you. You said you had this trade on.
Yeah.
You have this the pound CHF on.
Now I'm just looking at it because that time it hit the stop loss.
It hit the stop loss. Then when we did that analysis, I showed you this thing now.
Yes, I even forgot to re-enter it.
I told you that I think before we ended that call, I told you that if I am going to re-enter this trade at all, it will be at this point.
Yeah.
And that was exactly where it came and turned back.
Yeah, I didn't write it.
This thing was the analysis we did that day. I did not clean it now.
Yeah, I can see. Wait, I want to check because I have where all these things. I wrote them down.
And I even drew this thing. I drew it that day and I left it. I've not even come back to this currency pair because I've been concentrating on something else. I said for this currency pair that day we looked at the overall trend. I told you the overall trend is pushing down massively. The overall trend is pushing down massively, and even this buy that we are buying to this level, it is like a pullback to the main trend.
Huh? Not yet.
It's a pullback to the main trend.
NZDJPY. Oh my God, I not put that.
You did not put this one, you did not notice this one.
I not put it.
Okay, but you remember that we discussed it.
Yes, I remember we discussed it. That was the first one we even discussed
But
because you know you remember you put it on the YouTube video.
I put it on YouTube video, it failed. So anytime any of my trade fail, I don't use to throw it away.
Okay.
Because for every reason it should work normally. So if it did not work, then something maybe I did not interpret something correctly, or I reduce the stop loss. If you set your stop loss using the ATR, there's a way if I had entered this trade around here and used the monthly ATR to calculate my stop loss, it would have still accommodated this movement.
I take it now. Since I can remember this.
And here, this is a solid demand zone. It is bouncing from a solid demand zone. So what are we talking about? This thing has given you a reversal pattern here on the daily time frame. So imagine it turning at this level.
Yeah.
If you go below 4-hour time frame, you might begin to go into fake out and get confused. You begin to think like day traders.
I notice you always stop that daily. You don't really like going to 4 hours.
If you go to the 4 hours, it should just be to confirm and enter. But most time you should just stop around the daily 4 hours and the weekly. Those areas will give you stability. I think this is a good setup anyway.
I will still like to enter the trade. Anyway.
So see here, though this looks like a kind of crown formation there. We shouldn't have even entered this trade because this was a crown. But this crown has completed around here. Let's hope that it can push us back. If it pushes us back there, then you can peacefully target this level.
Push us to which area?
I'm looking at this area.
No, you said hopefully it can push us back.
This was a counter trend break somewhere here now. So it might come back there to take a balance before it push.
Yes, that's what I'm saying. That if I can wait to see maybe if you come back back to that point, I will watch it and take it.
And it can even push from here up because the movement has not even solidified. All this thing was just like a inaugural movement. Mm-hmm. And this place looks like this place was a resistance that it has come to find a support.
Maybe it should just come there.
As it has done. The movement has started. No way. And then you can see the distance. This one, the stop loss will even be reduced.
Before you go, I think I have one question. And these are pertain to what you are talking about now. Now, we are already on NZDCHF. Can we still take any pair like that has like maybe NZD or another pair that has CHF? Like
if your overall risk per trade is like 2%, if you risk 2% of your account per trade, and you have trade that has to do with CHF in two different currencies, you can take 1% in GBPJPY and 1% in NZDCHF. So that way you have not over traded, and you have reduced your risk by taking two trades, and at the same time you are still within your risk tolerance. So if you have any question now, just let me know, then we can call it a day.
The next one I want to ask you is the NZD card.
NZD card. Okay, let's look at it. You see that this one failed.
Yes.
So let's look at it now. And this thing reinforces the reason why I feel like I should no longer be going to that lower time frame. Because if you this thing now, look at this. If the overall trend of this trade is bullish, now this trade has failed. You have to look at it again objectively. Looking at this weekly time frame, what information are you seeing?
It's rejecting from the support level, and I see that it's coming down.
To where?
The trend line that is coming from the top there to where your cursor is.
Around this zone.
Yes.
Okay. Now this is the weekly time frame. Okay. Let's go to the daily time frame and see something. This level, this was the level I was hoping that it would turn from. So you see this kind of candlestick pattern, it was supposed to turn from here and push up, but it has clearly broken this level and even broken below this level, which I saw on that 4 hours. This uptrend has been breached, and right now it is a retracement for the bigger trend. I'm going to show you exactly where that trade is going to. You will see it now. You will see now that there is a major trend here. Look at a major trend that is forming. From here, it went there and came like this, then came there. Then there was a smaller trend in between this movement, which was on the 4 hours. if you go to the 4 hours, you see it pushed here, this one. But all this small trend was a continuation of that major trend. So now that major trend wants to do a correction before it push up, because the fundamental is in favor of the up movement. So if you go to the daily time frame, this is what is going to happen. If I had stopped my analysis on the daily time frame, we wouldn't have had that problem. So look at this. Look at it here. So that is the trade. You wait for this trade here. So if you're going to re-enter there, it's risky. No, this is the trade. This is the trade.
On what I just you said, NZD card is going to sell.
NZD card should sell to this level.
Okay, before it continues to buy.
It can. You see, you cannot tell the market what it should do. Do you get?
Yeah.
You can't tell the market what it should do, but you know where you are waiting for it.
Yeah. I get what you're saying.
Imagine me coming here to re-enter from here. This place was already over time. No, seriously.
And there's already formed a reversal pattern.
It was over time actually. That trade from okay, look at that time. This area has not formed. It was around here. I was hoping that it would come back here and push, which it actually did. Oh no, it was here now.
Yes, push. Yeah.
It was here coming to this level now. Which of them? I will check that video.
No, you didn't actually send this NZD card. It was when we had our last call. You mentioned it.
Okay, so this trade, in fact, you should not be targeting any entry until here. This is where I will have peace of mind to re-enter that trade.
Yeah, that's fine.
Any place you enter around here, the uncertainties are too many. The odds against you are just too many.
Yeah, you can just be saying it's going down, but it has a point where it will come back.
That is it now. So technical trading should not actually be coming to the. And if you notice another thing here that should show you a problem, all this movement did not do a serious retracement.
Yeah, it's just sure.
So all this, you can see it as one single movement. Just take a look at it now. Get to the fib from here to here. You see, there's no major movement. Anyway, so I think this is the last one.
Yeah.
We are done. So those are solid trades anyway. So now after seeing this one, then you will go and be gambling. No?
I can say even if it is the time I spend on our system looking for that pattern.
All right.
Yeah, I took off researching for more to know more about fundamental analysis.
And then it's a lot of work. Some people will not be willing to do that work.
It's really a lot of work.
So you can just avoid it and then come here and be drawing lines on the chart and say you know how to. Anyway, so
I've done that before. So
this is a nice trade here. This is a nice trade. Well, all right.
Thank you so much.
All right, thank you.